FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today is 10/9/19. That's right. We're a third of the way almost through October. Well, what are the markets doing? How crazy are things getting? Well, they're getting pretty crazy. You just have to look. Hey, as we speak right now, just to let you know, and we're talking at about 11 o'clock on the 9th. Gold is right around 1506, up about $1 per ounce. Silver 1770, down a penny. Well, our good friend Eric Hadik is with us. You find him at Inside Track Trading. That's INSIIDE tracktrading.com. And Eric, as always, it's a pleasure to have you. So looks like we're hitting something. Something is going on. The market's coming up against a wall. What do you think is happening here?
Well, I think the overall market has definitely been in just a wide trading range. Really, you can go back to the beginning of 2018 with a lot of the indexes. And if you look at a chart on something like the NYSE index, which I think has about 2,000 stocks incorporated in it, it peaked in January of 2018, and then September of 2018 rallied to a secondary high, didn't quite make it up to that previous high. Then in April, May of this year, rallied back up to close to the September 2018 peak, but didn't make it. And then just recently peaked a little bit below that, or right even with that high. And so that's kind of a good representation of what you've seen in a lot of the market. You've had these certain stocks for a while, the FANGs, although they've kind of slowed their ascent, but they were carrying the market in 2018, and they've since kind of consolidated. So it's just a lot of that, those wide swings leading into this whole period of 2018, 2019, even part of 2020. I described why I thought, for a number of reasons, that the market would resemble what we saw in the late 70s. One of the basic reasons is a 40-year cycle I watch, but I don't look for that to be a real precise omen or precursor. But it did make for a very good illustration of what I expected from the markets. And if you look at 78, 79, the market traded very similar to what it has done the last almost 2 years. Even some of the rallies and sell-offs have been in similar months. February of 2018, when the markets finished a quick, sharp sell-off, was similar to February of 78. And then the rally into third quarter, fourth quarter of 2018 was very similar to what you saw 40 years ago. And then the sell-off into late year, same thing. The rebound into mid-year, same thing. So I think we're going to continue to see a lot of this whipsawing, and certainly the fundamentals that are continuing to emerge reinforce that one day you get talk of, things are looking good with trade talks with China, and then the next day you've got, impeachment inquiries and China lashing out and saying, no, we're not that close yet. And then Kim Jong-un is shooting off some submarine-based missiles, and it just goes back and forth. I think that we are in a major transition phase, but I think we're still going to see this for a few more months.
Mm-hmm. So dollar, we're pretty bullish on the dollar all along, and hasn't disappointed, has it?
The dollar has really kind of, it certainly held up, and I've been looking for a decent correction in here that has not yet materialized. But it really, for all intents and purposes, has been in about a 5.5 cent range on the dollar index for over a year. And each time it has rallied, it kind of retests the highs of that range and maybe spikes a little bit above it and then immediately gets a new round of selling. And that's all within a range where it's lower than what it peaked in January of 2018. So it is a longer term, a 1 to 2 year corrective type of phase or wave, but I think that it is vulnerable to a 1 to 2 month sell off in the very near future. So I'm watching that.
Interesting, but you see like continued turmoil in Europe. You're seeing the repo market kind of melt down, and then seeing a shortage of dollars in China and the Chinese banks, and they need them to make their debt service. So does that portend for a higher dollar or a stable dollar, or what do you think?
It certainly could on, at least on a 1 to 2 year basis, but I don't think that precludes or prevents a sharp reaction in the meantime, especially after this market has edged higher for probably a year now. And you can also get those single events that just have a whipsaw reaction. I even wonder if there is the perception that some resolution is coming in the trade war, would that pressure the dollar more because it starts to support some other currencies, not the least of which is yuan. That's been used as one of the pieces of ammunition in the trade war arsenal from China's perspective. The more they can suppress the value of their currency, it at least helps them. And so if you've had it suppressed and suppressed and suppressed, and all of a sudden you start to get a little bit of perception swing, that could have a quick knee-jerk reaction on the markets and on the dollar. And I always stress the idea that it's perception. It doesn't even mean that there has to be some big treaty or trade settlement or even communique. It just needs to be that things are starting to swing emotionally in the other direction, and so traders respond on those perceptions, and that could be something within the context of what you're describing, where you just get this knee-jerk reaction, you get a bit of a sell-off in the dollar, and then the bigger, longer-term fundamentals start to re-exert their influence.
Yeah. So what about precious metals? What are you seeing here for the yellow metal and the shiny one?
Yeah, gold has really adhered closely to just an uncanny web of cycles that I've described over the last few years. And at its shortest and core, it's related to a 7-week and a 14-week cycle. But if you look at the bigger intermediate to like 6 to 12 month swings, it has been so consistent on a 27 to 29 week cycle, and even broader on a 55 to 59 week cycle, and even expanding that 112 week cycle. Ever since the peak in 2011, gold has adhered to these cycles and just been uncanny with them at many of its major turning points. I diagrammed a lot of these cycles back in January of 18 when they were all coming into convergence in late January, early February of 2018. And gold ended up setting about a 6 to 12 month peak at that time. Then it sold off into August, exactly 27, 28 weeks later. and bottomed. Then it rallied into late February, exactly when that same series of cycles came into play. It topped again. The next phase after that late February peak was in late August, early September, 27 to 28 weeks later, the midpoint of the 55 to 59 week cycle, and a host of these other cycles all coming together in these narrow windows of time. And that was exactly when gold peaked. So I think we're in a period where we're going to see a couple months of some consolidation below those late August, early September highs, but that's in a broader context of a bull market that still is going to work higher into 2020, and the next and probably greatest synergy of those cycles comes into play in March of 2020, when I think you'll see your next important peak. So then the important factor is in between now and then, when we hit a bottom and when we trigger a new round of buy signals. And already some of that's lining up for me, giving me some more specific expectations to when that will happen. But not everything not all the ducks are in a row yet. So I've just started to discuss that with my readers, and I would be happy to send out some copies of some of the recent reports that document some of this to any of your listeners that want to request it from us. But there's also a couple of things that I haven't yet published for my readers that I'm not going to discuss specifically right now, but I'd be happy to send copies of that stuff too once I publish it.
How do you get it? Is there an email address, or where do they go?
Yeah, they can email us at admin, like the first part of administration, ADMIN, at InsideTrackTrading.com. They can go through our website, and I know that you've had links on your site too. So if they got to us through that would be just as good too.
Okay. Excellent. So you're thinking that we're going to see the fourth quarter usual advance or rally for precious metals then? Is that you're thinking?
FSN Radio. It's all about what's next.
Today's show is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortex trend and is advancing the Copper King project towards production in Wyoming, led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who is directly responsible for several major Nevada gold discoveries. U.S. Gold Corp is well-capitalized and has an extremely tight share structure with less than 20 million shares outstanding and trades on the NASDAQ, a major exchange, under the ticker symbol USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold.
The Financial Survival Network. It's all about what's next.
I think that getting later on in the fourth quarter, yes, that it will start to mount this next advance that should carry over into probably March of next year. Mm-hmm. Some reports that I did in third quarter of last year, 2018, detailed a little more broad of a roadmap especially for mining shares and the XAU index. And it described how I thought we would see a bull market from third quarter of last year into late 2020, early 2021. So I think that even that March 2020 timeframe could be just another ascending peak in a series of ascending peaks. So, it could mark a top for a few months, but doesn't mean that it's the major high in metals. So yes, I do think that the fourth quarter could usher in the next phase of this bull market, but a little bit later in the fourth quarter.
Okay, so later in the fourth quarter, and no doubt that'll probably take silver with it then at some point, right?
Yeah, and that may also coincide with this correction I think could occur in the dollar, but that correlation is not steadfast. There have been, in fact, throughout the first 6 to 9 months of this year, the dollar's been moving steadily up and gold had been moving steadily up. So it's not always an inverse correlation like some people think it has to be.
Yeah, don't you think that's interesting? So the market headed higher, the dollar headed higher, and gold headed higher, which is not something that we've seen a whole heck of a lot of.
No. And part of that is you have to dissect it and kind of look at the periods in there where they are trading in opposition. And really, like gold had its kind of latest finale in July and August, and that was when the stock market was selling off sharply. So that was some of what you kind of expect, and I think it was even the impetus behind the last rally in gold was that safe haven, flight to quality type of thinking that stocks are selling off. Where do we shift money for the time being? And precious metals all benefited during that August sell-off in stocks.
Mm-hmm. So interesting. And the interest rates, we've seen them go to like all-time lows. Are they going to stay there, or you think we're going to see them head higher later in the year or next year?
I have there's been a pretty consistent 4-year cycle in bonds and 10-year notes, and then some breakdowns of that cycle, and also some unrelated but somewhat corroborating cycles. And from a broader perspective, they're telling me to look for a final peak in bonds, which would be a low in interest rates, around mid-2020. But in between now and then, I expect a 3 to 6 month low in bonds, so a little bit of a high in interest rates, or maybe a rebound in the perception towards the end of this year or very beginning of 2020. So I think that they are going to stay in a range, and of course, another factor where you've got some real conflicting and competing fundamentals, not the least of which is the Twitter account of our leader. Anytime Jerome Powell doesn't do exactly what he thinks he should, as far as dropping interest rates to negative if possible. So you've got a lot of that battling back and forth, and I think you're going to continue to see that. And these cycles make sense that they're independent of things like the election cycle. Although I guess the fact it is a 4-year cycle, you probably have to factor in that there has been election pressures in there somewhere. But the closer we get to the whole campaign season and the election cycle, probably the more volatility you're going to see in all of these markets.
Mm-hmm. So volatile markets are going to rule. Oil kind of been range bound. It got up into the mid 60s after the attack on the Saudi oil installations, but has now fallen back. And prices at the pump, are at a fairly low end of the range.
Yeah. Now that you're getting past the driving season, and like you said, crude has really, after that, it bottomed around 50 in both June and in August, and then surged to 62, 63 on the futures that I watch on that Saudi attack, or Iran attack on Saudi Arabia. But we're right back down to those lows. And I've got one of my technical indicators. It's a monthly trend indicator, and there's certain key ways I use that. And one of the signals from it, when we rallied into April, it was kind of a failure type of signal. The best way to describe it, that crude was trying to reverse the monthly trend back up after the sell-off into late 2018, but it failed to do that. And usually when a market does that, it will ultimately make its way back down to the preceding low, So in this case, I'm talking about the late December 2018 low, before it is able to embark on a more convincing rally. So since late April, that has been kind of the overall governing factor, but then there's a lot of intermediate indicators and trends along the way that time some of these swings. But again, from a broader perspective, I think that crude could retest that low, which in the December futures is what I'm focused on right now. That's down around $45, whereas that contract currently is trading at about 53 and a half. So I think once we are able to make it back down there, that's when I'd start to look for a more convincing and more long-lasting bottom, and advance to originate from there.
Right. All right. Well, it all seems to be falling into place. It's going to be interesting to see if we do in fact get our annual late fourth quarter boost in metals prices. The mining stocks are trading at or near all-time lows. The Toronto, the TSX Venture is, last I looked, end of last month, I think was at 558, approaching all-time lows. So those companies need some good news. You would think with the price of gold going up that the stocks would have been more affected by it. On the upside, some, of course, were, especially the majors, but the juniors have just been kind of moribund from the whole thing.
Yeah, and I don't know if some of that plays into currency factors and whatnot, because like the gold silver index, which is the one I follow more closely, I don't follow all of the mining shares and the various indexes, but the XAU has had a nice rally since September of 2018 all the way into September of this year, and has only corrected part of that. Basically, it rallied from about 60 up to 102, and then pulled back most recently to about 88. So it's still in the upper third of its 1 to 2 year trading range.
Right.
But like you said, it's all which shares you're focused on.
Yeah, very, very true. Hey, well, Eric, so we should just bears repeating. Eric's making a special offer to you, FSN community members. Get his report. You just have to go over to Inside Track Trading. That's inside with 2 I's, INSIIDE, tracktrading.com. Get that report. Hey, let us know what you think of it. Let us know what you think of the future price of gold and the other markets. The dollar, has the dollar seen its day? We laughingly refer, Eric, to the U.S. dollar as the Taj Mahal of Baltimore. It just ain't what it used to be. But hey, questions or comments, email us, kl@kerrylutz.com. Whether you're listening to a podcast, whether you're on our burgeoning YouTube channel, just please subscribe, like, and share. It really helps me a lot when you do that. Helps get the word out, because believe me, the mainstream media is not telling you any of this. You will not hear one word of it. Stocks only go up. Real estate only goes up. Government will rule forever, even in the face of burgeoning deficits. But you need to get the other side of the cycle, the other side of the news, so you know what's going on. That's why I highly recommend you go to Eric's site. Eric, you've been spot on gold prices for the most part over the past 4 years that I've known you, and I don't expect that to change any now. So we're bracing ourselves for the late Q4 rally in precious metals. Eric, always a pleasure. Oh, guys, by the way, go to the website, sign up for the newsletter. Got one coming out day after tomorrow. Always a pleasure, Eric. We will talk to you again real soon.
Thanks for having me back, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.